All right, traders, if you watched my last video, you know we were planning to swing trade call options on the SPY. However, within that video, I did state if we go to $412, I am looking to take profit. With that being said, we almost hit 412. We went to 411.50, then we rejected, and I decided to sell into that rejection. The reasons why I decided to sell: first of all, NVIDIA has earnings. NVIDIA has earnings coming out. It's just way too fucking high in price to bet on that NVIDIA is going to go up. I don't like flipping a coin. Second of all, I like to scalp. And if I'm buying calls at 410.20 and this rips to 411.50 and I'm up 5 figures, I'm taking my profit, man. And then third, like I told you guys, it's just not 100% the best move. The best move would be if this gaps down tomorrow and goes to 408 to 405, I will then be looking to, go super heavy on swing trading calls. So that is the reason why I decided to sell my call options when this was at 411.20. I learned it real time within Trader Society. We were taking starting entries at 410.70, and then I went super heavy when it went to 410. With that being said, man, I wanted to explain to you and walk you through the overall chart because we absolutely just crushed it day trading, man. We just had like 4 people join in the past hour. They must have done very, very well on that trade because if you looked at the overall video last night, I said the best level to buy calls is at 410.25. I also prepared my team and alerted them real time, in terms of this 410.25 level. This was the level right here. 410.25 is the bottom of this channel for a gap close reversal. Best level to buy calls. I also stated, based on today's daily candle, SPY is setting up for a bearish gap down. We discussed that in yesterday's video. So that was all right and all 100% spot on. And our 410 level has been banking for the entire day. So we did very well on that. I started off the day actually down 5K. Now I'm closing up nearly 5 figures. But with that being said, I ended up crushing it, man. I just crushed it shorting the SPY. This is another reason why I decided to sell my swing trade. So, the reason why I like that 410.25 entry is because there was a gap to fill here with major support. That was the gap close reversal level. And if you watched my last video, I was explaining to you guys, it just has to retest the top of this wick. It just has to retest the top of this wick towards this 411.90. It just has to go back there. Then it's probably going to drop. I compared this pattern right here to this pattern right here. We put 2 and 2 together. There was a nice wick here at resistance. As soon as it spiked back to the wick towards this resistance, it sold off. So with all of this, pattern recognition in mind, I told myself the most logical thing is to sell and take my profits. And then if I wanted to swing trade, I can just look to get back in. Plus, it wasn't the 100% the best swing trade to begin with. So I'm likely playing it safe, man. I sold, I locked in my profits, did very, very well on that. But I'm likely playing it safe, and I don't think I'm going to swing trade. I'm already up very, very nicely on the day. But we just crushed it on puts. So the reason why I did puts after I sold my calls, and I did puts 3 times, I'm going to explain to you why. So you can see right here, SPY has a wick to retest. So you can see right here, it has this wick. It retests the wick, and then it sells off. And you could see it's been doing that like all week. There's a wick to test here at the high. It retests the wick, and then it sells off. So we have this wick at 412 at 411.90. That's where my price target was. And I told you guys in the video, if we go back towards that level, I'm likely just going to take my profits. And that's exactly what we did within Trader Society. And then I switched to puts. The reason why I switched puts, and this is why you have to use the 30-minute chart, because if you would use the 30-minute chart in the strategies that I teach, you would have just got out of your swing trade and then just sat on the sidelines and figure out what is that you want to do. You would have taken the profit because look at this. You have this trend reversal candlestick on the 30-minute. You have this trend reversal red candlestick on the 30-minute. Do you see the similarities, right? So we see the similarities. It's at the same price. What does it do? It spikes higher, and then it closes with this wick at the top. It spikes higher, then it closes with this wick on the top. What does it do the next 30 minutes? The next 30 minutes, this goes from 411.40 to 410.20, straight back to my initial entry. So I'm looking at the pattern, I'm looking at the chart, I'm saying to myself, I better sell my call options, take my gains, and then if I want to swing trade or day trade it again, just get back in at 410.20 at my initial entry, man. You have to be able to read patterns. There's some people that just hold their hopes and they ignore this type of price action. They ignore the short-term price action because they're trying to hold and swing trade for the bigger win. But there's times where it makes 100% logical sense to just get out and then wait. That's where the short term is, knowing the short term price action, how it works, is a big advantage to knowing the macro and long term, because you can lock in your profits and then you can use some of those profits, take less risk, get back in at your same entry. So basically, when I saw this pattern, red trend reversal candlestick, bullish 30-minute breakout, then it closes with the wick, bullish 30-minute breakout, then it closes with the wick. I looked at that, and when this 30-minute candlestick closed, guess what I was telling people within the chat? I hit it 3 times. I was bearish on the 30-minute, man. Look at all of these alerts, man. This was right after I sold my calls for profit at 411.20. Look at this, man. So if we go to this candlestick, let's see. So this is at 2 p.m. If we go to 2 p.m., man, I let them all know in advance. Let's see. So I'm going to type in 2 p.m. here. This was the time frame. So, I get the vibe it's going back down past 2 p.m. That's exactly what happened. And then I just kept on hitting puts, man. I hit it 3 times. I'm going to show you and explain to you these alerts, because this was a phenomenal day trading opportunity that I hit 3 times. So at 2 p.m., I took puts at 411. Why did I take puts at 411? Because trend reversal red candle, green bullish 30 with the wick, green bullish 30 with the wick. What happens after that? It sells off. Where does it sell off exactly? It sells off exactly when it breaks above the closing price of the previous 30-minute. The previous 30-minute right here, it closed at 411.21. As soon as it broke above it, it started selling off. So right here, it closed at 411.20. So if history is going to repeat itself, once it goes above 411.20, guess who's going to be smashing puts? I'm going to be day trading and smashing those puts, anticipating that this bearish 30-minute candlestick is going to be red and super bearish. And if history repeats itself, it's going to drop back to 411.40, which was my target. Now, did I hold for 411.40? No, I'm a scalper. Instead of holding for that 30 minutes, which I could have done, I ended up scalping it 3 times. Look at these scalp alerts, man. I ran up a huge bag in such a short period of time. In just one single 30-minute candle, I'll typically do 2 to 3 day trades based off the direction of what I believe that candle is going to be. But right here, I alerted puts at 2 p.m. I was in 411 puts. If we go to 2 p.m., you can see right here, this is 2 p.m. I got in when it was spiking. When this was at 411.30, that's when I hit puts. As soon as I got in, it sold off, all using that pattern recognition. So in terms of my sell, you can see right here, I alerted that I sold my puts. I made a quick $700 profit. 3 minutes later, I made my $700 profit. When those out of money puts became in the money, I made my money. And then with that being said, I did it again. Right here at 2:05 p.m., I was in 411 puts. If we go to 2:05 p.m., why did I do puts right here at 2:05 p.m.? Because it went back above 411. The target last time was 410.40. That means they're going to try to drop it to 410.40. So if 411 puts go out of the money, I'm going to buy those puts out of the money and sell back in the money. And I'm not going to try to milk it and hold to the exact target, right? And then you can see right here in terms of I added at 2:06 p.m. Why'd I add? Because it pushed a little bit higher. I'm going to take advantage of all those spikes. If the 30-minute candle is going to be bearish, I'm going to short the spikes when the puts are going out of the money. And the overall direction told me that it wasn't going to push much higher than the previous closing of the 30-minute candle, which was at like 411.30 or 20 or something like that, right? And then I sold those puts. I did very, very well on this one. I sold them again. I even added more at 2:07 p.m. I sold them for a $4,000 win. And then I did it one last time, man. One last time. We had a guy who just joined the program. He made 2 times the cost of the program within his first 20 minutes in the program. But you could see right here, this was the last time that I ended up doing it. Let me show you guys. So this was the last one that I ended up doing at 2:14 p.m. Why did I do puts at 2:14 p.m. right here? See how when I'm doing my puts, the candle is green and bullish and it's spiking, and then I'll add even more because the 411 puts are going out of the money and my target is at 410.40. So instead of holding through all these dips, I sell the dips and then I rebuy the rips with anticipation that that 30-minute candle is going to close bearish, and then I sold into the dip once again. That's the name of the game, man. With that being said, I'm on sidelines, man. You just have to understand, man, we are scalpers and we are day trades. If I'm seeing, like I said in the video, if we go to 412, and I'm not going to nickel and dime it, if I'm seeing a bearish pattern at 411.50 and my target's 412, and that bearish pattern is saying it's going to drop back to my initial entry, guess who's selling calls? I'm selling my calls, whether I'm up, whether I'm down, and I was up very, very nicely because I was buying in the 410, low 410s. We were smashing calls. We prepared this days in advance. We were telling people 410.25, 410.25, best level for calls. But with that being said, man, look, The swing trade, it's very, very simple, man. What you have to understand is the market hasn't even closed yet. We don't know what this daily candlestick is going to look like. I personally believe we're going to close at 411. I'm thinking we're going to close at like 411 to 410.50 in between that zone. I think we're going to close right around there. If we go back under 410, we're going to be looking for calls again. 410.30 was our key level for calls. I told him if you want to buy calls, do it at 410.30. That's where we're going to bounce. That just played as well. But anyways, swing trading is just too speculative, man. And the main reason people were telling me was this NVIDIA earnings, man. NVIDIA earnings, I don't like holding anything through earnings, but in terms of NVIDIA, man, it's just so fucking high. You know, I don't want to swing trade into some bullish type of play where something is just so high. It would make sense from a chart standpoint. From a technical view, it would make sense for NVIDIA to drop. That's what would make the most logical sense. It's just too fucking high, man. SPY is the one that's oversold right now, not NVIDIA. But anyways, man, in terms of the SPY, you just have to understand this, man. There's no confirmation to be swing trading calls. This is what I like and this is what I dislike. So in terms of this pattern, so we have the doji, we have the doji. We have the big red day, we have the big red day. We have another big red day, we have another big red day. There was one more big red day last time. So there was one more big red day last time, and that was at the lower gap at 404. We still have a gap at 408. We still have a gap at 405. It's not the best trade idea. Now, in terms of something that can be considered bullish, and this, I didn't discuss this in my last video. I just noticed this right here. Take a look at this. See this red bearish candlestick right here? This is why I said in yesterday's video and within the chat, we're likely going to gap down and open up bearish because look at what happened, the last time. So it forms the same bearish candlestick right here. And then what does it do? It gaps down and then it gaps down. You can see it shaping the same candle. That's why I believe we're going to close at 411 because look, it bottomed at, 403.74 and it closed at 405. So it spiked $1.25 off the lows. And right now the lows are at 409.88. So the most likable outcome is it spikes $1.25 off the lows. It closes at 411. That's why I'm saying that. But if you look at this pattern here, this can give you some hope in terms of swing trading calls. You have this bearish candlestick here. You have this bearish candlestick here. It gapped down the next day, gapped down the next day. It's wicking at the key level on track to close at 411. It's wicking at the key level on track to close at 411. And then next day, it gapped up and it rallied super hard, right? So that can give you some hope in terms of the swing trade with the pattern recognition. The only thing that I dislike is we have lower gaps to fill below, and last time it was 3 red days. However, 2 of those red days bottomed at the same price. But if you look at this pattern right here, the pattern is actually kind of saying that this could be the bottom. So take your own risk, man. You guys decide what it is that you want to do. Like I said, who knows? Maybe I will swing trade some starter on calls. I'll have to figure it out, man. But these are great entries to be day trading calls. We're going to be likely smashing calls one last time and then selling into the close, anticipating that this is going to have a little spike into the close to that 411. We shall see. But like I said, man, it's a decent idea to swing trade calls. It's not the greatest and it's lacking confirmation. And the way I see it is, I'm going to be very blunt about this. The best possible outcome is we gap down tomorrow and then that's when we swing trade calls. We don't know if it's going to happen or not, but in terms of what would be the best trade possible? The best trade possible would be if we had one more gap down and then we bought calls, right? So we don't know if that's going to happen or not. So you have choices. You can, fear missing out. You can miss out on this particular situation and hope for the best idea, or you can FOMO into something that's a decent idea, right? That's something you have to decide. And then if you're going to FOMO into something that's a decent idea, you might want to take starters, and if it doesn't work out, cut your loss, and then you get in with a heavier side on the next trade. Or you can play it safe, just sit on the sidelines, let this whole earning situation play out, hope it gaps down, then hit calls to the best level. It all depends on your situation and your style of trading. And you have to write that down, decide. So just use the information that I shared with you and you decide as a trader, as your self-sufficiency, what it is that you want to do. This isn't about, Will's going to swing trade calls, I'm going to swing trade calls. Will's going to wait, I'm going to wait. You have to understand why it is that I'm waiting, why it is that I'm swinging. And then, you just have to understand what would be most suitable for your style of trading, for your self-sufficiency, for your trading path, right? So I shared with you the information, and that's what I personally believe. We could reverse here. The best thing that can happen is we gap down, and then we buy calls on the gap down. Best level possible. No risk through this NVIDIA earnings and stuff like that. But with that being said, man, I'm going to wrap up this lesson. I hope you guys did well. I personally think we're going to spike back up to that 411, and we're likely getting ready to do calls here very, very soon.